Bryan, I will start with you. You know, shares of Coke only up 2%, but this looks like a pretty good report. They even upgraded their guidance slightly for organic revenue growth of at least 5% from 5%. Are you surprised we're not getting a bigger boost here today?
You know, I think the one thing about the report this morning was while the top line was much better than expected, I think to get a little bit more bang post the results probably would have required an EPS, a little more EPS upside. I think the fact that margins came in maybe a little light relative to where consensus was, and EPS kind of came in line, kind of took maybe some of the sizzle off the stock this morning.
Okay, and Laurent, you know, as Coke looks to sort of make some shifts as soda consumption declines, they're looking for less sugary drinks and smaller can sizes in some cases, which seem to work this quarter. But is that sort of a sustainable strategy?
Yes, good morning. I think so. I mean, they have been doing very well this year at revitalizing the carbonated soft drink portfolio. By going, as you mentioned, to smaller can, to immediate consumption. And not only it does drive, additional intake, but it does drive, the top line because those products are usually priced higher. And actually, it's a good news for the bottom line going forward. So yes, Coke has been very good at revitalizing their portfolio, and they will continue next year by the introduction of, for example, of CocaCola Energy, for example.
Yeah, and to that point, what are your expectations for the Coke Energy launch when it launches here in the United States in January? It's already in 25 countries. Can we get any read-through from how it's been going so far to what we expect it will have sort of as a power effect here?
Yeah, so thanks for the question. So actually, the launch in the US will be what they call, a 2.0. They are revising and adjusting to the US. They are moving from 2 SKUs to 4 in the US. The price point will be more in between Red Bull and Monster. So what we expect next year is about $200 million worth of retail sales going up. That's represent, to give you a sense, about 1% of retail sales in the US for Coke as a company and about 10% of Monster. I think that will be very interesting, one of the most promising launch for Coke and an important launch for Coke in decades under the Coke brand in the US.
Hey, Bryan, how much of a bull case can be built just around the dollar alone?
Well, you know, it's an interesting point. There was a lot of drama going into this morning's print about the outlook for currencies next year and what type of a drag it might be on EPS. And I think this morning they gave us a little bit of clarity on that. You know, it's going to be about a 2 to 3% drag on earnings next year. And I think that suggests that earnings can actually grow, right? And Coke has been stuck around the $2 level for a while. So if that holds and you've actually got some clarity on taking this great top line growth and driving it to the bottom line, I think that actually sets up the stock really well next year.
Bryan, it seems like there's a lot of different geopolitical crosscurrents going on in the world right now, not the least of which Brexit, I understand, that may have had an impact on some of the results, at least in the UK. What was the read from Coke about the global markets around the world and how that's impacting their business? You know,
I think what they're trying to do is, I think what they said this morning was control what they can control, right? So to the extent that there's geopolitical risks, like Brexit, for instance, they shipped some inventory to the bottlers ahead of it so that bottlers would have enough concentrate in case there was some disruption at the border. But beyond that, more broadly, it's really just, you know, if it, to the extent that it affects consumer purchasing power, you go to smaller pack sizes, you go to returnable bottles, you do things to keep the product affordable regardless of the macroeconomic conditions. And those are the type of things that Coke can control where, you know, they can't really control government policy or the economies.
Laurent, when it comes to the point about the returnable bottles or the sustainability, consumers being a little bit more conscious about the fact that we're buying an awful lot of plastic water bottles, Coke is sort of looking to do some different things there. Is that something that you think could be beneficial to the business? Are there enough consumers that will change their purchasing habits to sort of offset the cost of investing in that area?
Yes, and I think that's the case for every consumer goods company. What Coke is doing and moving away from virgin PET to recyclable. They talked this morning about an hybrid new bottle they are introducing in the US next year. I think all this is good for the industry because at the end of the day, it become much more of a concern for consumers And really, PepsiCo is going the way of SodaStream, and Coke is going in the way of their refill of their beverage business. So it is really important for the consumer, and that will be wrong not to address it from a company like Coke.
Bryan, one last question, the age-old question, really. At this point, do you prefer a beverage-centric Coke or something that has snacks like Pepsi?
It's a good question. You know, one of the reasons why we've liked Pepsi over Coke this year was just simply cash flow, right? If you look at the two businesses, they both grow at similar rates, but Pepsi converts more cash to free cash flow, which they use to pay out dividends, grow the dividend, and buy back shares. I think an important factor as we move into 2020 is the evolution of the free cash flow at Coke, and as that improves, you know, that could change that balance. But you kind of think about a balanced total return model. Right now, Pepsi is able to deliver that in a way that, you know, Coke right now is still constrained by their balance sheet and can't.